everyone hear me? Wonderful. Okay, welcome. Hope everyone is recaffeinated after the break. This is an extraordinarily important panel. We hear a lot about tech startups and how much they've raised, and they're kind of like the sort of sexy front runner of like African tech, but actually they can't do anything if we don't have the infrastructure. This session, we're going to be looking at building and investing in technology infrastructure across the continent. I'm going to ask my fellow panelists to introduce themselves very quickly, and then we will go straight to questions. We'll go straight to I'll question the panel, and then there'll be Q&A at the end as well. So, Darlington, over to you, please.
Thank you, Jessica, and good morning to you all. My name is Darlington Mandivenga. I am with Cassava Technologies, where we believe that Africa's future is digital. But that future can only be digital if we build the roads to get there. That's our chairman who said that. And the roads that we're talking about here is the infrastructure. That's why I'm here, because we're very passionate about building Africa's digital future. I hope that with my fellow panelists, Manjit and Chuba here, we'll be able to at least inspire, encourage, or challenge someone in the room. If we fail to do any of those three, we hope that at least you pick up an insight that you might use. Thank you very much.
Failure is not possible. It will happen, I believe. Manjit.
Thank you. My name is Manjit Dhillon. I'm the Group CFO of Helios Towers. We effectively buy and build telecommunication towers to give you mobile connectivity. And we've been in operation for 15 years, listed on the London Stock Exchange for 6. We have both equity and bonds on the public markets. So, very much looking forward to this conversation.
Thank you so much. Last but not least, Chuba.
Hi, everybody. Chuba Ezenwa. I run the investment banking team focused on sub-Saharan Africa for Bank of America, global financial institution. We're naturally very passionate about Africa and very big supporters of the digital infrastructure space, and delighted to be sat next to two of the best operators as well in the continent. Thank you.
Lovely. Thank you so much. So this panel, we're going to be looking at, I guess, a number of themes. So investment, what investors are interested in, what's being underinvested in, how we're kind of going to plug some of the gaps in infrastructure on the continent as well, and importantly as well, the role of government and how government can collaborate with private capital. But before that, obviously, Manjit already mentioned that they've been listed, Helios Towers has been listed on the LSE for 5 years, so congratulations, or 6 years, congratulations on that. Let's start with, as we're at your home from home, the London Stock Exchange, how has a public listing supported the scaling of Helios Towers?
Yeah, it's been an interesting journey over the last 6 years. I mean, so we listed 3 months before COVID. So it kind of gives you a sense as what happened during that period. But we listed, COVID happened. Following that, we've had global volatility, tariffs, etc. So it has been a bit of a challenge for everyone on the London Stock Exchange. But putting that to one side for one moment, what a listing gives you is almost a seal of approval. So when you're going into M&A processes, if you're looking to speak to investors, they know that there is a certain level of compliance and structure that's there with the company, and it just takes away some of those questions that are there. So that's definitely helped with some of the M&A processes, and we've actually doubled in scale since we've been listed. So we went from 5 markets now being 9, 7,000 towers to 14,000. That all happened in that backdrop. We were able to do a convertible bond. That only happens in the public sphere, and actually Chuba in his previous life at Citi helped us with that. And that was done 7-year money at 2.7%. So that's lower than US Treasury today, and that really did help us try and generate the capital that we need. And ultimately, it just opens up pools of liquidity that you might not necessarily have in the private sphere. So as with everything, whether you're private or public, there's positives and negatives, but it's definitely helped us to accelerate our growth trajectory over that period.
Okay, lovely. And then just to sort of round off on the listing, do you have a sort of a 1-minute guide or any tips for listing on the London Stock Exchange?
Have your processes in order. That's number one. It is more difficult than I think you would expect in the initial hump. Thereafterwards, actually being listed is relatively easy. It's just kind of trying to get that structure in place. And for particularly African tech, what happens in one country impacts the entire continent. So when you go and speak to investors, they will pick out one little thing in one country and try and tar you with that brush. And so a lot of it is actually about engaging on knowledge about the entire continent. You're actually more of a salesperson for Africa than you are necessarily for your tech. Your tech is actually the easy part. It's the other part that you have to work on. So if you can get that right, then actually you really start to get some momentum. And I think bit by bit, people are starting to understand it, but it is an uphill struggle.
Okay, thank you so much for that.
Jessica, if I may add.
Yeah, please do.
Look, I think Manjit and his team are actually one of the best in the streets in terms of, I think, recognizing that, yes, the IPO is important, but life in the aftermarket is even more important. And one of the things they've done really well is just that constant, consistent engagement with the investor community. And, I think the rewards are there in terms of, the attractive levels they've been able to raise debt, for example, and on the equity side, the continued engagement that they get from the market. So I also wanted to just commend Manjit and his team for that.
Oh, very good round of applause team for Manjit and his team.
I paid him for that.
Yeah. Okay, so thank you for that, and that sort of whistle-top tour, some advice, free advice here on listing on the London Stock Exchange. So let's look at unlocking capital more broadly in the market, and also, I guess, marrying the investment gap and market readiness, and some of the discussions and debates around that. So this question is to all. What are your companies investing in most deeply at the moment? What's sort of area of focus for you? Darlington, maybe we can start with you, please.
For us, it's three main areas. The first one is connectivity. We've been at it and we are still at it. And I'm going to say this with humility, but without apologizing for it. We have built the largest independent-owned fiber network in Africa, spanning over 110 kilometers from Cape to Cairo, from Port Sudan to Lagos, from Dar es Salaam to the west coast of DR Congo, and connecting 300 cities and towns in between. And that has taken some serious heavy lifting. And Manjit and I were just talking about one African country which has caused us some serious troubles, but he seems to be very comfortable in that country, so I'll need to spend more time with him. Yeah. So and then the second area is the data centers. We are building state-of-the-art networked and hyperscale data centers. We've got 3 in South Africa, 2 in Johannesburg, 1 in Cape Town, and we've got another one in East Africa, Nairobi, and 1 in Lagos. And we've got a couple of other cities that we've earmarked, and we continue to build. The last area, which is the most recent in our portfolio, is the AI factory that we are building in partnership with NVIDIA. And this is really about bringing compute power and compute capacity to Africa, which is needed to complete the digital infrastructure that is to power the AI economy in Africa. Those are the 3 main areas we are focusing on.
Okay, thank you so much for that. And then, so you're past the startup stage, but what would you advise startup founders in the room to start investing in terms of their own kind of business technology infrastructure?
Look, we in Africa, there's a saying that says, if you want to go fast, you must go alone. But if you want to go far, go together. In addition to the basics of the funding, talent, and systems, we are beginning to see an emergence of the critical success factor of strategic partnerships. Because Chuba can tell us a little bit more about this, but funding seems to be drying up a little bit.
Okay.
So you need support. You need people that bring certain capabilities that you don't have, so that you don't invest in them yourselves, and then you focus on developing localized solutions.
Okay. So Chuba, is Darlington right? Is investment drying up, or is it? What's perception versus reality here?
Yeah. Look, I think there's 2 perspectives on that. I think one is actually Castech has been one of the most successful companies at raising capital privately in this space, right? So it's worth commending them for that. That said, it's not an easy thing to do, right? If it was easy, I probably wouldn't have a job. Look, I think it is a reality, and we can unpack I think over the course of the discussion, some of the reasons for that. I think, there's an element of where we are in terms of the kind of sentiment towards the region more broadly, and I think that's changing in a positive direction slowly. I think there's an element of the risk premium that people attach to the continent as a result, and we can unpack what are the things that we can do differently. But I think fundamentally one of the big issues is actually fragmentation, right? And fragmentation in terms of, you could talk about policy, people, capital, right across the spectrum. And what it really needs is platforms like this to aggregate and actually get investors, especially international investors, comfortable with the risk, that the risks are being managed appropriately.
And I think on that, I think you've got to really focus on quality. And what I mean by that is the quality of the business and what you're trying to operate rather than quantity, because the opportunity is massive in Africa. We know that. There's opportunity everywhere you look. And if you try and run at everything, then you actually might not get anything. So try and pick your lane, try and make sure you do that as well as possible. And then you'll start to get the investment there afterwards, because people are worried about FX. People are worried about a policy change that will then diminish all the value. People are about actually the business not working. So there's lots of different elements. If you can focus on the quality elements, then investment will come. That's what we've seen at least.
So there are viable projects on the continent?
100%.
Okay.
Yeah.
Can you name some that you have your eye on or that are of interest?
Well, mobile, just more generally, if you think about it. So if you think of the biggest mobile network operators in the world, take Orange as an example. The only reason why Orange are hitting their public numbers at the moment is because of Middle East and Africa. All of their other businesses are either stable or declining. So big, large, multinational MNOs are making their numbers because of the region more generally. So that shows that they're actually then having to invest more in that market. And so if where we are, which is trying to help those companies try and expand further, that is the place where you want to be. And then that will enable a springboard for all these great companies that we're seeing today. So I think we're in the right place. People want to be connected better yesterday, not even today. And so that will speed the level of investment as well. And we are seeing it come through in dribs and drabs, but it is coming.
Jessica, if you will allow me.
I will.
Going back to startups, because that was the question, it was on startups. Chuba used the word, there's a lot of fragmentation, and he's talking about quality. You have to compete on the basis of quality. What we are seeing is that there are a lot of startups that are coming in who are not necessarily bringing anything different. They are coming in to do stuff that is already being done. So they do not have a competitive advantage. And within a very short space of time, they run out of steam because they can't compete. And like I said, when the fuel starts running low, they then just fall out. So we are seeing a lot of consolidation, a lot of M&A. And I think that some of the startups should be prepared instead of just wanting to go it their own way. That's why I talked about strategic partnerships. But there's also an opportunity for them to partner with other existing entities instead of just wanting to be another player.
That's interesting, Darlington. So what would you like what areas are startups missing? What areas should they be focusing on to kind of plug some of the gaps?
Well, this is very important. So the starting point is to say, what is your business case? Okay? What problem are you really trying to solve? And is there no other player who's solving that same problem? There could be, but if you believe that you've got a better way of solving that problem, then yes, by all means, go for it. But in certain cases, you are probably better off complementing what the other person is doing, and that's where I'm talking about joining forces.
And have you got any examples of any startups that are actually plugging some of the gaps or building and have a sort of a solid business case at the moment that you would have your eye on?
Look, you and I were talking about the countries that you visit in Africa. There's a number of startups coming up in what we call tech hubs in Africa, and those are Cape Town, Lagos, and Nairobi. If we look at Nairobi, there's a fast development of this buy now, pay later kind of concept. Okay, big players like M-Pesa have got that, right? They've got Fuliza, like a loan. Okay, but they can't move as quickly as fintechs do. So there are startups that have come up and they've developed solutions like that, and that is complementing what these big players are doing. So that exactly is what I'm talking about, that you need to come and offer something different to what is already there, but you complement.
And would you consider that to be an exciting business play in terms of startups building to almost then be acquired into larger infrastructure companies? Or
Interestingly, a number of startups that I've talked about, everybody talks about cashing out at some point, but others have got, so there are those with short-term views and those with long-term views, but a number of them, and I respect their reasoning for that, because most of them, once they kind of like cash out, they start something else. And they've ended up with something that is bigger. If you look at most of the companies in Africa that are doing well now, that were started by individuals, they've gone through that phase of building this, and then
it's kind of creating their own ecosystem, right? You have the Andela Mafia, you have Paystack Mafia.
Exactly.
People are cashed out and then they've moved on and they're reinvesting as well.
Exactly.
Okay, interesting. Sorry, Chuba, you were going to add something.
No, I mean, look, not to digress from the topic of the conversation, but look, exits are extremely important, right? In terms of solving for this, the realities of a tough fundraising market, because ultimately it's an integral part of the capital formation cycle, right? When people, can get liquidity, they're more likely to invest more, right? And actually, a good example of that we've seen recently in Nigeria was at the height of the, I think everyone's aware of the currency challenges that have now stabilized, and thanks to a lot of the good policies that the government have put in place. And in the recent height of the volatility during the sort of tariff discussions, you had a number of investors that took money out but put money back in. And why? Because they found it really easy to take money out. And so it's, and I'm speaking specifically around the sort of fixed income markets in Nigeria. So that's a good example of sort of what liquidity does in terms of being able to attract capital.
Interesting. And then, so sticking with you, Chuba, in terms of how do you evaluate returns? Like, how are you able to kind of think that long-term planning in terms of this project is going to cost $50 million, $100 million? Like, how are you going to make money in the medium and long term?
Yeah, look, I mean, I think firstly, you've heard a lot about the fundamentals of the kind of digital infrastructure space already. I think the KPIs that we all monitor and put in our various pitch books, in terms of, the structural under-penetration of e-commerce and internet usage and data. Actually, Africa is the only market today where voice is growing still, right? So incredible kind of, long-term growth opportunity. Ultimately in infrastructure, and, many investors have different, investment horizons and return targets, but ultimately it's a capex heavy industry, so investors want to see a return on that capital investment invested in certain technologies like towers and fiber. They're much more mature, so I think it's very well understood the path and trajectory there. In data centers, we're still at that infancy in Africa of growth in data centers. So, the question is the same question. How quickly can I increase my utilization, right? And are those returns over my investment horizon adequate to compensate for the risks that people take? So typically, infrastructure funds in the continent will be targeting somewhere in the sort of mid-teens type returns plus, right? So I hope that answers the question. I'm sure Manjit and Darlington will have some perspectives on
that. No, exactly right. When we're looking at our investments, simple kind of economic theory is as long as your returns are greater than your cost of capital, then you're going to make profit. So that's how we look at it. And ultimately, you're always looking for opportunities to increase one or reduce the other. And more often than not, if you can increase one, the other one will reduce just because you're operating your business better. But exactly as you said, you're trying to find the best places to then increase utilization, get compounding, reinvest in the business, and that's how the cycle works. I think one of the pieces that we sometimes see, particularly maybe with startups, there's some globally, not necessarily only in Africa, is that you try to go off something that's going to be a revenue multiple or something like that. That can go with the wind. You have to look at really what is the fundamental cash earnings of that business, because when money becomes more expensive and it starts to go away, or you need a higher return, can you actually facilitate that? And that's where long-term businesses come through.
Interesting. And then, so what's the current sort of appetite for investment in infrastructure? Is it buoyant? Are people excited? Are investors able to take that long-term view at the moment?
Yeah, it depends on which investor you speak to, frankly. I think fixed income investors have looked through the cycle long enough. I think they've been investing in Africa far longer than equity investors have been. International equity investors, I should say. So they are, if we take our latest bond that we did last year, and Bank of America assisted us with that, we actually had 50% of our book underwritten before we started, which is not, that doesn't happen very often. So there's a lot of investors who are looking to cycle money, which is fantastic. On the equity side, though, it's a bit more challenging. And why is that? It goes to all the things we were talking about earlier, but ultimately, if you've got a US Treasury earning you interest at like 5 or 6%, and then you've got something that is an African growth story, you are competing as two very different pools of capital, and it's quite challenging to kind of sell the dream. But you need to continue trying, because ultimately, once that US Treasury comes down, that African story is going to come right the way through. And so one thing that we truly believe is that the mobile growth and the growth of people wanting to be connected and utilising that technology there afterwards, that will not stop. And frankly, what we sell is Africa as a continent is going to be the largest, most populous place on the planet by 2100. 1 in 10 people will be African, 1 in 5 will be Nigerian. That's a lot of people who need to be connected, who want to be connected, who could be digital entrepreneurs. That is the opportunity. And so you've got to find the right pockets and wherever they are. And an investor should, by their means, actually try and allocate capital to the best opportunity possible. So you've got to sell that opportunity.
Yeah, I think the other, if I may interject, the other perspective here is how we kind of mobilize domestic capital. I think Manjit articulated very well the international perspective. We can't rely just on international capital. We have to harness the capital that we have domestically. And a free advert for Africa Finance Corporation, who published a very interesting report yesterday on this exact topic that estimated somewhere around $4 trillion of capital available domestically in the continent. About 2.5 billion of that is in banks. About 1 billion of that is in a combination of sort of sovereign wealth fund, pension, and the insurance sector. It's clearly a decent amount, not enough to close the infrastructure gap, but we need to have conversations as to how we can harness that a lot better.
And sorry, Manjit, going back to your point about sort of speaking to US markets as well, when you're speaking to international investors, are you telling the Africa story, or do you hone in on particular markets as well? Because, and this will then lead on to the next question about you all operate across many different countries in Africa, and obviously have to deal with different regulation, different governments, different FX issues, just different ways of doing business. But how do you tell the Africa story, or the Nigeria or Kenya or DRC or Tanzania story to international markets?
Yeah, the answer to that is actually that you do Africa first, and then you head into the markets there afterwards. And we get questions on markets that we're not in all the time. But you have to know a bit about that, because if you think about it from a US perspective, or someone that may never set foot in Africa, they're going to see, frankly, more often than not, negative pictures of the market. Everyone knows the Africa Rising story. So when you start to go into that growth trajectory, they intrinsically know that there's going to be the macro growth that comes there afterwards. But it's that risk point. So you have to try and target those quite quickly. So what we try to show, is that whilst you've had volatility globally, but also locally, we've had 10 years of unabated US dollar growth, not adjusted for local nuances, but what is the actual dollar growth that comes through? And that's been 10 years, year on year, actually almost every single quarter as well. So if you can show stability in periods of volatility, then you should be investing. And then you have to go into the local picture. And we have focused on actually not being so large, so that you can actually focus on the quality part, because when things do blow out, then you've got that stability kind of coming through. But yeah, there's there's a lot of wild questions that you sometimes get that are completely not needed for this particular business, but you just have to answer them.
Care to share any of the wildest questions?
Yeah, I mean, we had one question once, which was, how do you manage the risk of lions?
Okay.
So, and my answer is the same as you.
Oh, and then, I love that. Darlington, maybe you can give us a little bit of background about how you navigate doing business across multiple territories on the continent.
Yeah, that has been one of the most difficult aspects of our business. As you mentioned, when you talk of Africa, it's not one country.
Yeah.
It's a continent of 54 distinct countries with local nuances so you can't say because you know Rwanda, you know Zambia, okay? And the regulators are at different levels of maturity, and so it takes time to build relationships. There are times when we have been successful, believe it or not, from the first meeting. And then there are times when we have had to go again, because the first meeting would have been a disaster. And then there are times when we never went back.
Yeah.
Okay, that's how tough it can be. But we can't do without the regulators. Okay, that's one thing that we must understand. So we have to stay in there. Okay, and accept that we will have tough conversations at some point, whether it is from their side or from our side, and in the process start building trust. It's difficult to build trust, but they say that collaboration happens at the speed of trust. Once it is there, and you see, it's not only about demonstrating your technical capabilities, but it is also to demonstrate your alignment to their vision, their priorities, and show a commitment to the country, the region, or the continent. That has worked well for us in the long run. But we are also blessed in that we're in a situation where we can actually reference other markets where we have done it. And in most cases, we also use officials from those other countries to testify on how we would have worked with them.
If I may add, look, go back to the earlier comment around, to build on Darlington's comment around fragmentation, right? You rightly talked about, 54 different countries, different cultures, different borders. And, you can have a conversation about harmonization in terms of policy, regulation, currency, power pools, right? Power is obviously extremely critical towards, building digital infrastructure, right? You can't do so without power. I think what we have with our operators on this panel is platforms that are able to almost do the hard work for investors, especially international investors, because the mindset for a lot of these investors is, I don't want to have to do my homework on 54, 30 different countries, right? I want to build a relationship with a management team that I can trust to make the right decisions and manage the risks appropriately. So I think that's one of the solutions to the fragmentation issue, right? Yeah.
And then, so I guess we've already sort of then touched on public-private partnerships, really, in terms of this collaboration with governments, with government bodies, and then I guess making sure that private capital is channeled in the right direction, the right governments. And all three of you will have worked on public-private partnerships, and you'll understand the need to collaborate with regulators because you simply can't operate without them. What's the secret sauce? Like, what has worked? Darlington, you already touched on the fact that sometimes you've had a conversation and you can't go back, like it wasn't going to work. But what are the things that you look for, and what are governments looking for from you?
Yeah, like I said earlier, it's a meeting of minds. We are a business, so we talk business, right? And they've got their own national objectives, and hospitals, schools, libraries, and administrative offices. Zambia, we have done a similar thing where we've worked with the government to build connectivity across 1,300 schools. And that happened after a lot of meetings, of course, and a lot of patience, a lot of, heavy lifting, as I said earlier. But eventually it happened. Mm-hmm. And we are now building on that as we go to the other, countries. I just mentioned those two as an example.
And are there any other countries that are really displaying best practice, who are really sort of standing out on the continent for delivering strong public-private partnerships? You mentioned Chuba, Manjit, any countries in particular that we should be keeping an eye on, looking at as best practice?
Yeah, best practice, there's going to be pockets of it, frankly. But, look, if you take a country like, say, Tanzania, they're looking to try and expand grid. They're trying to expand the telephony so that they're doing subsidies in more rural areas. There's a lot of different partnerships that they're trying to push. But how do you get through to the regulator? It's another relationship that you just need to build. So it's about constant communication, trying to understand what they're looking for, trying to sell what you are trying to do as a business, because it should be win-win ultimately. One thing that does work and should work for all of us is that if you're trying to create a sustainable business, you should be doing it through local talent. So if you can create a very good localized team, localized at the very top levels all the way down, then there's a local business driving local growth. And that does actually make a difference. I think if you go in filled with expats, then it really has a different approach to how you then get there. So you want to show that you're investing in a local community, because that will then drive the local economy, which will then drive everything else. So but I do think digital is an easier sell than maybe some other areas, because if you think of the globe, digital drives about 3% of global GDP. In Africa, it drives about 7%. So it's doubly as important if you think about how it has an impact. So it is really, really fundamental to how that country will work. And mobile and the things that we're doing, and we're all doing, there's not enough infrastructure as it is today. So if they do want to go to that next level, you need more of it. And I remember one stat that does stick with me is that I think it was only a few years ago, there was more fixed line in Manhattan than there was in the entirety of Africa. So that just gives you a sense as to how different it is, and why mobile infrastructure, all of those things, if we're going to create these digital entrepreneurs, that needs to work and needs to work consistently. Yeah.
Interesting. Chuba, any thoughts on countries that are particularly open to public-private partnerships that are...
No, I agree with Manjit in terms of pockets of strengths. I think one good example you could look at a platform called InfraCredit in Nigeria, which is provides sort of credit insurance products for investors for local currency kind of debt issuance. It was set up by the Sovereign Wealth Fund in Nigeria, as well as a couple of the development banks, and on the private sector side as well, some commercial entities. And that's had some good successes in terms of increasing the allocation of pension funds locally into infrastructure projects, right? And you've seen also lengthening of tenors that corporates have been able to achieve in the local bond market as a result. So I think that's a good success story, but there's a lot more to do.
Okay, and then before we pause for questions, you mentioned that there's a lot more to do. So is it just capital? Is it policy? Is it, capacity to execute? What's the priority in this area when it comes to building infrastructure for the continent?
I'm going to cop out and just say all of the above.
All of the above.
I agree.
Yeah. Manjit, is that a third? I agree as well.
No, definitely. I mean, the one thing that they need, that every place needs to do, if you're going to get, and it was the same as what Baba was saying, we've all been saying, if you want to get investment in, you've got to be able to get investment out, because it only works if that cycle works. So that's what we also try and put through as well.
Super. Thank you very much. Do we have any questions from the floor at all? Yes, lady in the green over there, please. Do we have a microphone? Thank you very much. As this lady over here. If you could let us know where you're from and keep your question relatively tight, please. And if you'd like to direct it to anyone in particular, please do let us know.
Thank you. My name is Rudo Manyamba. I'm with the London Stock Exchange Group, work in finance. My question centers around infrastructure. So you're building all these data centers, the fiber networks, etc., and it's an asset. It needs insurance, and as weather changes and harsh events are happening, what is the cost of securing that asset for longevity in terms of bad weather, freakish events? And do you participate in these disaster bonds that are really high return at the moment?
Anyone in particular you'd like to ask that question to?
Yeah, I can take it. Look, so our assets are dispersed and all over, so absolutely the extreme weather is definitely having an impact. So we have towers in Madagascar where you have cyclones almost now annually, which didn't used to be the case. Same goat, we have towers in Oman as well, which is in Africa, but obviously has lots of extreme heat and cyclones as well. So we don't get involved in those bonds as such, but we either self-insure or we get insurance on the assets more generally. But frankly, it can be quite challenging. So you've got to basically try and strengthen the tower, make sure you've got early warning systems. One thing that we're actually doing, which is in early stages but could be very, very valuable, we have a geomarketing platform. So every tower that we have on a map. On the map, we then plot out socio-demographic information. Now we're layering on top of that 50-year forecasted weather patterns. So you can actually early forecast where those cyclones are going to be, groundwater swelling, extreme heat, for example. And now we're targeting those specific towers for early remedial action. So we've actually looked historically, and where there has been a cyclone or there has been wet weather that has caused flooding on the site, we've already identified those if we were to have used that data that we now have. So if you do those kind of pieces, it can work. And taking that one step forward, if you then utilise that and give it to the regulator and the government, they will know where potentially populaces will move as well. So that will actually assist them in maybe creating new roads, new areas.
Was targeted towards sort of physical threats to those assets. If we extend that to digital assets and things like operational resilience and cybersecurity, what are some of the things that you're seeing on the continent to address those digital threats?
Yeah, I can do this. Right. That's a great question. I mean, frankly, cybersecurity, I mean, we've seen in the UK, right, Marks and Spencers and various other big companies that have been hit. What is actually the real risk at the moment is not necessarily us as a corporate, it's your supply chain. And your supply chain, you are often dealing with people who are a lot smaller, particularly in certain markets. And those are the routes that can really cause you frailties. So it's how you start to work with those suppliers. Think of it, I guess, and this is exactly your area, but think of it as cyber health and safety. So you need to try, and health and safety we know is already not great on the continent, but how you build that up over time. So it's not going to be perfect, but you need to continue to look at it. And you try and keep the core very, very well protected. We don't actually have any customer data, so that does limit the capacity to which we could come under threat. But as we start to use digital solutions such as remote monitoring, being able to switch off sites remotely, manage them remotely, that then increases the risk. Because could you imagine a situation where someone comes in and switches off all the towers? I mean, that's a national security risk. So you've got to make sure you're 20 steps ahead if possible. But this thing is moving very, very fast. So it's certainly one of the areas that we're investing heavily in. But I think that the frailty is your supply chain, to be perfectly frank.
Thank you. I think we have time for one final question, please. This gentleman here in the middle. Thank you, sir.
Good. Is it morning? No, afternoon now. Good afternoon. My name is Philippe Vogelaar. I work for a Japanese investment fund and for a US investment fund, which we won't name out of courtesy to them. Question to you is, do you see a change in the origin of investors as geopolitics are evolving? So basically, do you see more Asian, more Central Asian, more Latin American interest for Africa, or have things completely stayed the same?
Yeah, no, absolutely. And if you look at the data, the UAE, I believe, has been one of the largest contributors of FDIs in the last few years. So there's definitely been a broadening of where capital's coming from. I think it's interesting you mentioned Japan. Japan's definitely one of the regions that we're seeing an increased level of engagement across sectors. But I think importantly, a lot of African governments in particular are sort of recognizing the geopolitics of today as an opportunity to really broaden your partnerships across the globe. So I'd say, yeah, definitely seeing a more diversification of pools of capital.
Thank you very much. Ladies and gentlemen, please give a huge round of applause. They've been very generous with their time as well. Chuba, Manjit, and Darlington. Thank you.